Hey, how's it going? Welcome back to my YouTube channel. Hey, you subscribe to this channel for regular videos on business, financial literacy, and leadership. So be sure to give the video a thumbs up and make sure you do subscribe to the channel for regular videos. All right, so I'm gonna jump right into it here, and I wanna give you a quick intro. We're gonna be doing a new series, okay? And this new series of videos that's gonna be coming out on the channel all have to do with the macroeconomic environment. It has to do with crypto. It has to do with online investments, and what's going on in the space today, right? So my research team has been putting together a whole bunch of awesome information that I'm going to be walking you through and kind of giving you an update basically over the last 7 or so days of what the macro environment has looked like with regards to crypto, the economy, mortgage demand, all of these really important things that I think is relevant for any entrepreneur or any business owner that really needs to know, especially if you're making investments or if you're running a business. Okay, these are things that I look at basically on the day-to-day that helps me make really strong, educated, informed financial decisions on what I'm going to do with my money. Now, I will say I am not a financial advisor. You should always do your own research. This video is just for educational purposes only, okay? So let me jump right into the video, and I have some tabs that I'm just gonna walk you through. We're gonna start with some big news on what's going on, okay, in the crypto environment. So the first piece of news is we have Warner Music Group announcing partnership with OpenSea. Okay, so as you may or may not know, OpenSea is the #1 NFT online platform where you can go buy NFTs and exchange them and trade them and all of that such, right? So NFTs, without going into too much detail, give you the rights either to access to an event or to a piece of art. Right. It also has other real world utility, including real estate and a variety of different things. Right. So OpenSea partnering in music group, Warner Music Group, is really big. So the entertainment company owned by Warner Brothers Pictures is giving select music artists the ability to connect to fans via Web3 technologies with the popular NFT platform OpenSea. Okay. This is macro bullish news for the crypto and NFT space, as mainstream entertainment platforms and artists will bring new users and hype cryptocurrencies, okay? So the entertainment industry is huge with music, celebrities, and all of stuff, and this is really gonna bring them together. Now, I just wanna give you an idea of why this is so big as well. Like if you look at OpenSea, OpenSea has a $13 billion valuation. Okay, so they're a huge company. And if you look at Warner Music Group, their market cap or valuation or so is around $12 billion. All right, so these are really huge companies that are coming together and partnering, and that's really going to bring a lot of attention to the crypto space and to the NFT market space as well. So we talked about utility for NFTs, right? So for this case, I know a lot of musicians like Snoop Dogg, for example, they're coming out with albums, okay? And the only way to buy their album is not going to be able to download it from Shopify or Apple Music or anything like that. You're going to have to buy the NFT, and that is a representation of your purchase on the blockchain, right? And that's the only way you're going to be able to listen to the music. So it looks like this is what OpenSea and Warner Music Group are going to be planning going forward. So I think this is really bullish long-term for crypto and NFTs, all right? So the next piece of news here is we have Disney, okay? So this article is from CoinDesk, says Disney's latest job posting hints at big plans for NFT and crypto adoption, okay? The company is seeking legal counsel to help it navigate crypto, NFT, and DeFi regulations as it expands into Web3. All right, now this is huge. This is really huge. So the entertainment giant is looking to hire a corporate attorney to oversee technologies. This is massive because if you if you take a look at the size of these companies, I mean, who's going to Disney World, right? Let me know in the comments if you've ever been to Disney World or Disneyland, right? We all have to go. We've all gone as kids. We probably bring our kids nowadays. This company is worth over $280 billion, okay? $280 billion, right? So imagine purchasing your ticket to go to Disneyland. Now, right now you might go online, Disney.com or whatever the website is, and you go purchase your day pass, and you might buy your hotel and all that stuff. Well, what if you bought the NFT And the NFT is a representation of your ticket. So when you go scan it, they're actually scanning your NFT that lives on the blockchain on your phone. All right. So it's a digital asset that represents a ticket. So this is really, really interesting. And what I love about NFTs as well, you can always verify who owns what, right? So there's no question on who owns what. So I think this is really going to be huge going forward. Again, for the NFT and decentralized finance space as well. So you're seeing massive companies that have multi-billion, decabillion, $100 billion companies that are getting into crypto and the NFT space. So I think it's really important that we start to pay attention to this technology and how can we get in early, adopt it early, and take advantage of this, right? The early birds always get the worm. So let's go into some other news. So crypto regulation is going to be really important. So once crypto adoption takes over, and now we're going to pump gas, we're going to get our groceries at Walmart, you're going out to take your wife or your husband out to dinner, right? Right now we use a credit card or we might use cash, but in the future, in the short-term future, I think within next 3 to 10 years, somewhere in that time frame, you can use it with crypto, or you'll be buying an NFT for your meal, right? Like these things are going to start to happen. But in order for the vast majority of people to really get into crypto, we're going to need a crypto regulation, right? So this piece of news, we have Jerome Powell. He's over the Federal Reserve. The Fed is basically saying they're paying closer attention to cryptocurrency markets and banks that are adopting crypto. Okay, so Jerome Powell has stated that there needs to be more appropriate regulation as the crypto space expands, okay? Now, I think this is extremely bullish because now you have the world governments and the world currencies and the leaders that are over all the world currencies, they're looking at crypto and saying, hey, this thing isn't going anywhere. Blockchain is not going anywhere. NFTs are not going anywhere, right? So there needs to be regulation. And what happens is once there's regulation in crypto, what you're going to start to see is you're going to see institutions like BlackRock. BlackRock has over $40 trillion in assets that they manage for their clients, right? So imagine if 10% or 20% or 50% goes into crypto. That will really skyrocket the crypto market, right? So we want adoption. Adoption is a great thing, obviously is a great thing, but more importantly, crypto regulation is a really good thing because it's going to give people the certainty and a better understanding of how to move forward with their crypto investments, okay? Especially these institutions that have trillions of dollars, okay? So if you're in before crypto regulation, you're very early, and that's a good thing. So let's talk about some economy news, okay? We have the same fellow here. We have Jerome Powell. So last Friday, Jerome Powell stated that the economy is headed to a new normal, okay? After a recent 75 basis points, so that's 0.75% of interest rates that went up at the end of August, adjusted the 12-month CPI inflation rate of 8.3%. So what's happening right now is, approximately over the last 2 years or so, we went from around $4 trillion or around $6 trillion in the economy to around $24 trillion. So the Fed printed a lot of cash, right? And that obviously caused inflation. So demand started to go way up and supply started to go down. So things got really, really expensive. So they're starting to implement quantitative tightening, which they have been for the last few months, to bring inflation down back to 2%. Right now it's at about 8.3%, right? So for the next year or so, at least for the next year, it seems like they're going to want to increase interest rates, which is actually Fed induced. Let's not forget that inflation has gone up because they've basically quadrupled the amount of cash in the economy. So there's more cash in the economy that there has ever been before right now. More cash than ever, right? So when people say, they don't have cash or things are too expensive or like they can't afford something, I don't know. There's more cash than ever in the economy. So inflation does need to come down a little bit to make people stop spending so much money, right? So they're trying to get it down to 2%. So basically, Jerome Powell is saying this is basically like the new norm that we're moving into. And this is just normal rotations in the economy, guys. I know I get a lot of questions, a lot of DMs, a lot of comments as well about, hey, what's going on with the market? Why is it so crazy? Well, I mean, if you look back through history, it's always been cycles. Market has cycles. Real estate has about a 14-year cycle, right? 2008 was 14 years ago, right? And now we've basically been in a bull market for the last 14 years. So there has to be some type of calm down period. And that's very healthy for the economy. It's a good thing, right? Because up only is dangerous and destructive. So, next piece of news here, we have mortgage rates. Let's talk about mortgage demand. I think this is something that we really should have on our radar with regards to the economy. All right, so the 30-year fixed rate mortgage continues to rise with a reported average of 6.7 to 6.9% as of September 29th. So here at the end of September, Powell suggests a potentially housing crash is possible, right? So I wouldn't say it's he might predict that it's somewhat of a crash. I think that there's going to be a settle down period, right? We've had housing demand. I mean, me and my wife, for example, we were going to buy a house in Austin back in 2020. We were shopping for houses. We were driving to the houses, and all of a sudden, an agent calls us and say, "Hey, the builder already accepted an offer, or the seller already accepted an offer. I'm sorry, it's not available." I'm like, "We're gonna be there in 5 minutes. What's going on?" That happened to us literally like 14 times. I'm like, let's not buy a house right now, right? So the market was way too hot. So right now what you're seeing is better opportunities to buy a house right now because the demand has gone down because of inflation and quantitative tightening, but you're seeing an uptick in interest rates, which is quite normal, which typically happens. So if you are somebody that is looking to buy a home right now, there's a couple options. This is what I would suggest. So maybe waiting a couple years for the market to cool off again, for interest rates to go back down, but then demand's going to go back up, right? So it's going to be harder to find a house. But if you have to get into a house right now, just be willing to accept the higher interest rate. But once the market recovers, in 2 to 3 years, however long that takes, you can always do a refinance, right? So that's actually what my family and I are doing. We're going to be looking to get into a home here soon, accepting the higher interest rates and just doing a refinance later because it's whatever's important to you. For us, we have a growing family, so it makes sense. We need to get a home soon. So, again, all normal market cycles. This is all normal stuff, okay? Let's go into the GDP recession, okay? So, the GDP for Q2 is at a negative 0.6%. Since Q1, also saw a decrease at a negative 1.6%. So the economy is technically in a recession. So when you have 2 quarters that are in a negative decline in the GDP, that's a technical recession, okay? So this is not to scare you. This is just saying that, the Fed is achieving what they want. Inflation's too high, so they need to increase interest rates, and they need to make people try to spend less money. Okay, this is simply what happens, right? So we're in a technical recession where people feel like they may not want to spend as much as they used to, right? That doesn't mean that they don't necessarily have the funds. That means they are feeling like, oh, interest rates are going higher. I don't want to use credit because I'm going to spend a little bit more in interest. So you have to kind of weigh the pros and cons of taking on debt. Are you getting into an investment that's going to potentially make a return, right? So if you're paying a higher interest rate, well, if you're getting into an investment that's going to make a return, well, great, you can pay that off a lot quicker, right? So you really need to weigh the pros and cons as well. So again, I want to remind you, this channel, my channel is really for forward-thinking entrepreneurs, business owners, people that are making investments, maybe in real estate and crypto, and especially in business. One of the things that I've always done really well is be able to help small brick and mortar businesses get new customers, and that's where I got my start. Now I'm expanding and really trying to understand and study, the real estate market, the crypto market, and how these market cycles work. All right, so. Technically, they're saying we're in a technical recession, but again, all normal business, all normal flows here. I think another piece of data when we're looking at the economy that's really important is we want to know what's going on with the unemployment rates. Okay, so for the Fed to stop increasing the interest rates, right, to drop inflation back down to 2%. They really need to see unemployment go up a little bit, because when they see unemployment go up, they're like, oh my gosh, this is, there's too many people unemployed. They start to drop the stop rates, and it kind of forces their hand to kind of slow down the tightening, right? So currently the weekly jobless claims has fallen about 193,000. So unemployment is an important factor for determining a recession, and usually a rise in the metric will support an economic recession. Okay, so right now the job market looks great. Okay, we have a report of it dropping 193,000 below. Okay, so that means jobless claims. So actually jobs are abundant, jobs are available, and people are getting employed, right? So this is actually a good thing for the job market, but not so much of a good thing when we're talking about quantitative tightening, when we're talking about these interest rate hikes, okay? So that's good news if you're in the market for a job, but for the macro environment, if you're like, you want the recession to be over, you want Jerome Powell to stop raising interest rates, well, this is not such a good statistic, all right? So that's just an interesting thing, I think, to have on your radar. So in summary here, the Fed has continued to raise interest rates to tame inflation, lower demand, and allow supply to catch up. Supply has been lagging as a result of supply chain issues following the COVID pandemic and obviously the war going on in Ukraine. So the result is shrinking the GDP. So all of these macro environment conditions has given the Fed the reasoning to continue these hike rates, okay? Again, all normal cycles, there needs to be a cool-off period, so this shouldn't be something we should freak out about or be upset about, just hang tight, create a side hustle, try to figure out how to have multiple streams of income, start an online business, right? There's so many things that we could be doing. This is actually a really great time if you have an open mindset and you're positive, right? So let's talk about now Bitcoin adoption, Bitcoin and crypto adoption. Okay, so I think that this is something really interesting to look at here. If we go over to TradingView, okay, we can see that currently Bitcoin is, it's been bouncing around over, let me pull up the daily candles here. So over the course of the last week or so, we've been trading somewhere between this $19,000 to $20,000 range, right? And it's been pretty consistent. And as you can see, if you look at the daily, it's been pretty boring for the most part since back here, I would probably say since around September 3rd. Yeah, about September 30th. These are all, let me put on my daily candles here so we can get a better idea. But yeah, it's been fluctuating in this 18 to 20 range probably for about the last 4 months or so. All right, ever since the correction really started happening, I would probably say about 5 months now. Total market cap right now of the crypto market, if I go to coin market cap, so you can see the total market cap is about $934 billion. So in the peak, right? So real quick, if I were to go to, let me just go to all here so we can get an idea. So Bitcoin had this big run up. This was, I think, Thanksgiving. So November 1st or so, right? November 1st, 2021, we were at $69,000. We actually basically had this double top from April to November last year, right? When we had all of this cash in the economy. And then obviously it started to go, all the way back down. I think right up here, the market cap for the whole crypto economy was around $3 trillion. So it was just over 3 times of what it is right now. So approximately 66 to 70% of the asset class has gone down. But that's across the board. If you look at Apple, if you look at Tesla, if you look at all these other Microsoft, all these other big stocks, everything's down somewhere between that 50 to 70% range. Okay, so this is quite normal. All right, and real estate has gone down at this point somewhere around 20%, right? And it's going to continue to kind of correct and fluctuate, right? So if we take a look here, Now let's take a look at the Bitcoin hash rate. So Bitcoin mean hash rate has seen an increase in the last year overall, despite Bitcoin dropping from all-time highs, okay, last fall, which was in November, like I said. So hash rate has seen an increase over the past couple months despite market volatility. This is actually a really good thing. So you're seeing this continue to go up and up and up. So if we go to, this was around, so this is March. So look, all the way back here in November, right? The hash rate was all the way here, you know, at about 140 E, right? And it's gone all the way up here. So this is good because this means that people are continuing to mine Bitcoin at a profitable rate, okay? There's only 21 million Bitcoin in existence, right? And the only way to get new Bitcoin is for miners to mine them, right? So that does take energy. So this is basically telling us that the miners are profitable in their efforts, right? Meaning, so this is actually very bullish on Bitcoin long term, right? So this is a really good thing to look at. If we had a dip, so when the market did correct, you know, around after May, June, July, you saw a slight decrease here, but you're seeing that it's actually at all-time highs ever since really the big correction back in November. So it's going up and up and up. So this is a really good thing to keep in mind. All right, so let's go to the next thing here, which I think is a very important piece of news. So the CFTC, the Commodities Future Trading Commission Chair, Roasting Bayham, states that Bitcoin might double in price if there's a CFTC regulated market. This is incredible bullish news, right? So the CFTC, not too long ago, the SEC was trying to create regulations, you know, around Bitcoin, around crypto, and right now they're in a couple litigations, like with XRP. If you know what XRP, or you've been following XRP, they're looking like they're not going to win that one, right? And you can go do your research. I might talk about it in the next video, but it's not looking too good. The SEC typically likes to create a lawsuit, and then based off the outcome of the lawsuit, create regulation from there. Crypto is so new, there really isn't anything to regulate it. There's no laws. It's all based off of laws that were created literally 70 years ago. Crypto is a completely new asset class, so people are trying to treat it like dollars, like all these bonds and all these treasury yields and all these different traditional investments, where it's a completely separate asset class. So it needs to be treated as such. So there needs to be new regulation. And with the CFTC involved, I mean, the chairman's saying we could have we can double Bitcoin's price, which is, I think, pretty incredible. That's going to double basically the crypto market cap as well, and potentially get it to new all-time highs. So I'm very in favor with this. I think this is really good and bullish long-term for Bitcoin and crypto in general. So good on that. So next piece of news here, we got the Ethereum Merge that just happened. So as you may or may not know, I'll just cover this real quick. On CoinMarketCap, if you go here, you can see that CoinMarketCap ranks all of the cryptocurrencies based off market cap. So obviously Bitcoin is number one at a current market cap of $369 billion, and Ethereum is ranked at number two at $160 billion, and so on and so forth, okay? Now, the difference between Bitcoin and everything else, Bitcoin really is more of a store of value, right? It's kind of like a digital gold. I would consider it like that. You can use it for payments, transactions. You can buy things with it, but people really just want to put it in there to hedge against the dollar, hedge against inflation, hedge against their currency. Really, if you look at, maybe in my next video, I'll talk about what's going on with some of the other world's currencies, but that's why people get Bitcoin. Bitcoin is a powerhouse. Ethereum, on the other hand, is also amazing. It's the second largest crypto, but it's an application. You can create things on it, right? You can create applications. You can create like blockchain softwares that you can use, right? Like, for example, we all use Zoom. We all use YouTube, right? We all use Facebook and all these social media platforms, and we might have if we are in business, we have CRMs and softwares that we use for our agency, right? Well, you can replicate all of that type of material or softwares and applications on Ethereum, on the blockchain, right? And there's multiple chains that can do it. Ethereum's the biggest, most popular one. So, excuse me, that is the difference between Bitcoin and Ethereum. And up until not too long ago, Ethereum was based off of proof of work. So just like Bitcoin, miners had to mine Ethereum and basically set up, mining farms and use energy and plug a power into the wall, and their computers and CPUs would do these complicated calculations to create and generate Ethereum. And then the people that were able to do it faster, more efficiently got rewarded. Those miners got rewarded Ethereum, right? So that's how it works. So there was a competition. So since the merge happened, so this is relevant for this piece of news that I'm covering here. Since the merge happened, what happens was that merged Ethereum over to proof of stake. So now that manual competitive computation that had to get done to mine Ethereum, now that's being done through other people like you and I staking our Ethereum and providing liquidity to the pool for other people to do transactions, trade cryptos, take out loans, and so on and so forth for crypto. So now it's power to the people that are rewarded for staking, right? So it's a whole different ballgame now with Ethereum now that they have completed their merge. Okay, so the impact, the ETH merge impact on crypto, aka the merge, has had a positive effect on the space. And as this upgrade to the software architecture has unprecedented a milestone victory for the second largest market cap layer 1 cryptocurrency on the market. So this is a very positive, bullish thing for crypto in general long term. And it's significantly good as well because it also decreases energy use, which is something that is always a concern. So I just have a couple more things that I thought was here. So that's basically the weekly wrap up here over the last 7 or so days. I did want to show this. So Altcoin Daily, they're a channel that we follow for crypto. They posted this. Austin had posted this on their Twitter. Not too long ago, Elon Musk was considering buying Twitter, right? And he's claiming that there's all these bots, and it's true. There are a lot of bots on Twitter, online, not real people that are making comments and liking stuff, right? But some of his text messages, I guess, were released to the public, and those text messages are quite interesting. So it basically said Elon wanted to make Dogecoin a huge part of the Twitter space, okay? Now, real quick, before I jump in, Dogecoin was a popular cryptocurrency that got big last year in 2021, and it's technically a meme coin, and there's not so much utility or real use case of it, right? It's actually a top 10 crypto with an 8 billion market cap currently, right? So if you got into crypto because of Dogecoin, or Shiba Inu was another one, you got in during the mania because people might have been posted about it on Facebook or Twitter or on YouTube, and you're like, what's this Dogecoin or Shiba Inu thing? So you bought it because everyone's like, it's going to blow up, right? You just got to be careful with that kind of information. You always want to do your due diligence, not, follow the herd, because, some people unfortunately got wrecked in that. So it's okay, though. We learn from it, and we do better next time, always, right? So basically, what Elon said in that tweet, it says here, Elon's Twitter plan was later deemed not feasible, but this was what he wanted to do: put Twitter on the blockchain and charge 0.1 Doge to tweet or retweet and remove all bots. Imagine that. So every single tweet that you made on Twitter, every single tweet that you retweeted or to remove bots, you would have to have Doge in your wallet on the blockchain, and that would be a transaction. So Doge's price would have skyrocketed, and if that was the case, in my opinion, right? And then Twitter would have been completely on Web3, which is super interesting. It says, he also said, my plan B is a blockchain-based version of Twitter where tweets are embedded in the transactions. you'd pay maybe 0.1 Doge per comment or repost. So it looks like, even though it didn't work out with Twitter, it seems like Elon may make a blockchain-based version of Twitter where he still includes Dogecoin, which I think is super interesting. So if you're somebody that is in Doge, this could be something potentially interesting for the future as far as its fundamentals and its price, right? So I just wanted to cover that real quick. Also, on these videos, guys, before I wrap up here, I will be doing a segment towards the end of my videos with all of this economical update, crypto update, and I will be talking about the Wolf Den. Okay, the Wolf Den is an ecosystem that I am heavily a part of and participating in. They're building and doing some really, really cool stuff, including real-world utility. I heard someone bought 400 of acres out in Arizona and building some amazing things on it. So I'm going to continue to give you guys an update on what the Wolf Den is up to as well, and what that ecosystem is doing with their cryptocurrencies. Okay, so I think that if you are somebody that is in the crypto space, this might be something you want to at least have on your radar and follow what they got going on. Okay, so thank you guys so much for tuning into my video today. Make sure you do like the video. Make sure you do subscribe for regular videos. I'm always coming out with videos, again, about business, about financial literacy, about leadership, working on yourself to be better humans, to be better, make a better impact and leave a legacy worth meaning something. I think these are things that we think about and we need to just get it done, okay? So again, my name's Douglas James. Appreciate you guys so much. Like the video, subscribe, and I will see you guys in the next video. Thanks so much.